Hey guys, welcome back to the channel. In this video, we're going to explore Roundhill's Weekly Pay Universe ETF expected to drop soon called WPAY, a fund of funds similar to YieldMax's YMax. We'll also explore what potential returns it could have based on using a synthetic backtest. As always, don't forget to smash that like button if you like this type of content so the algorithm gods know that I'm here. Hit subscribe if you're new so you're alerted every time I publish a new video about stocks, investing, finance, and news. Before I get started, I have to hit you with a quick disclaimer to appease these YouTube gods. This video is for entertainment purposes only, not financial advice. You should always consult a professional. With that out of the way, guys, let's get into the video. All right, so Roundhill teased us on X saying, mark your calendars September 4th, 2025, right? And a lot of people were wondering what they mean. And there could really only be one of two reasons, right? If we go to Roundhill's website, we see that they have coming soon two ETFs, one for meme, all right, the meme ETF, and one for WPAY or the Weekly Pay Universe ETF. I think a lot of people are excited for WPAY, and I think it would I think it would upset a lot of people if Roundhill did not release WPAY and instead went with probably meme. Just my thought on that. But anyways, for any new subscribers, what we're going to do here is go through WPAY, go through what it is. And then what we'll do is kind of, use a synthetic back test to see how it could have performed had it been out at the beginning of the year, right? And this will kind of give us an idea of, the future performance. Of course, past performance is not, guaranteed results for the future or whatever that saying is. You guys know what I'm trying to say, but yeah. Anyways, let's take a look at what WPAY is. All right, so WPAY is the Roundhill Weekly Pay Universe ETF. It seeks to provide investment results before fees and expenses that correspond to the performance of the Weekly Pay Universe Index. The index is designed to track the performance of a portfolio of Roundhill single stock Weekly Pay ETFs. The fund is structured as a fund of funds. So basically, this is an ETF that's going to hold a basket of ETFs. All right, what is that basket exactly? Well, this is that basket. This is the Weekly Pay ETF lineup from Roundhill, and they have quite a few tickers in here. All right. They have pretty much the whole Mag 7. You're going to have Apple, Microsoft, Nvidia, Meta, Tesla, and Amazon in here. All right. As well as Google. And they also have some other tickers that have had, crazy momentum this past year. You have things like Coinbase, you have Robinhood, Netflix, Broadcom. You even have Palantir in here, and you have MicroStrategy. All right. And then we also have Berkshire Hathaway as part of this. So, this lineup of ETFs is, it's my favorite, honestly. I'm just being honest. It's the stuff I am invested in. Full disclosure, I have HOOW, PLTW, MSTW, and I also have NVDW, right? So I've been pretty happy with these ETFs. The important thing to know about these ETFs is they are leveraged products. Okay. So, if you're, investing into, let's say AMDW, if AMD, the underlier, has a, 10% day where it pumps 10%, well, this ETF will move up 12%. But if AMD has a bad day, maybe bad earnings or something, and it falls 10%, well, this ETF is going to fall 12%. All right. So that is one of the biggest, drawbacks of these funds, or that's with really any leveraged fund. It's not even a drawback. It's probably more of a feature than anything. But what I also like about these funds is that they pay every single week, right? Thus the name Weekly Pay, right? It doesn't take a scientist to figure that one out. But they pay out every single week. All right. Now, what they say on WPAY is that the fund will make weekly distribution payments that should be expected to fluctuate from week to week based on the distributions of the underlying Weekly Pay ETFs. So if you've been investing in these, you will know that these are not fixed income instruments. All right. These will not pay out a steady annualized dividend. What they do is they pay out weekly distributions, and they will fluctuate week to week. If we take a look here at the Palantir Weekly Pay ETF, we see a distribution rate of 63%. And you might say, wow, that's really cool. But I've seen it as high as 158%. And, the week before that, I think it was like 120%, so it will change week to week. And I know that because if we go down here to the distribution for the last 12 months, you guys will see that it has not been, fixed income. It is not, a fixed dividend yield, right? It will fluctuate week to week based on the momentum of the stock based on if the stock is moving higher in value or if it has a dramatic pullback like we had here in August. That will really give you the idea of how these will, pay out in the future, right? So we can see here, on August 18th, it paid out $1.58. But if we look at August 25th, it paid out 52 cents. So more than 2/3 of its dividend or distribution was basically wiped out. That's not a problem in my opinion, because again, if you're bullish on the stock and you're bullish on Palantir, if PLT continues to rise higher because of Palantir, then these distribution payments will, kind of pick back up. So I'm not too worried about it, but just be aware that it does happen. So why is that important? Well, if we look at all of these, right, I'm not going to do all the math for you guys, but you guys can look through each of the distribution histories to see how these are doing. So basically what WPAY will do is take all the distributions from all of these ETFs and basically pay it out, through WPAY, which would be really cool, right? We don't know what it will pay in the future, right? We don't have an idea. It could be a distribution rate of 30%, when averaged out, because again, they're taking all the payouts from this. Most of the Mag 7, they don't really have juicy payouts. It's more so like the Robinhoods, the MSTWs, the PLTWs, the stocks with a lot of momentum behind them that pay out better. But they have some, quote unquote stable payers, something like Apple, maybe an Nvidia or a Google or an Amazon. So what they'll do is they'll take all those payments and pay you out through WPAY. So let's take a look at the prospectus. So this is where it's going to get kind of cool, because I wanted to know how might WPAY actually perform in this market, right? And we don't know, because we'd have to do a lot of fancy graphs and things like that, but we do have some tools available to us. All right, we do have a backtest portfolio which we will use in order to create a synthetic weekly pay, but we need to make sure that we can create the right conditions for this synthetic backtest. So we're going to go to the prospectus here. All right, real quick, we don't know what the fees and expenses of the fund is going to be because it's not out. But if I had to guess, it's probably going to be between 1% to 1.3% for the expense ratio. And that's just to, kind of be competitive out in the market, because YMAX from YieldMax, they, I think, charge 1.27% or 1.3%, if I'm not mistaken. So, I wouldn't be surprised if this expense ratio will probably be about the same. All right, so moving down, we don't know the portfolio turnover. We kind of already talked about the portfolio strategies, but this is important right here, okay? The index seeks to provide equal weighted exposure to each weekly pay fund. That is very important, okay? Because if you're thinking this is going to be a market cap weighted approach, ETF, something like an S&P 500, where, NVIDIA and Microsoft and basically the Mag 7 would be at the top, well, you'd be wrong. What this is going to be is an ETF where all of these underliers, all of these ETFs are equal weighted. So out of a possible 100%, these are going to get like about 6.6% or 6.5%, if I'm not mistaken. So that is actually a good thing, in my opinion. That's a benefit, because if NVIDIA, like we just had, bad earnings, or Palantir, where it's getting smoked this month, if these are dropping dramatically in value, it's not going to take down the whole ETF. So this being completely equal weighted across the board, I think, is actually a benefit. All right, so going back to the prospectus, we also know that each month this will be rebalanced, okay? They will rebalance this ETF every single month, which again is, in my opinion, a benefit, because you're going to have days where Palantir just absolutely rips, and NVIDIA lags behind, and maybe, I don't know, MSTW shoots up or shoots even more up than Palantir. I have no idea. But what they will do is rebalance it all, to bring them back to what their ideal allocations should be. Okay, so we know two important things here: equal weighted exposure, rebalance monthly. And we know what the underliers are. So let's create a synthetic backtest and see how this could have performed if it came out earlier in the year. All right, so for this little experiment, we're going to use Portfolio Visualizer. You can also use valueinvesting.io. That's the website. So for this, what I took all the tickers, right? Apple, AMD, Amazon, Broadcom, Berkshire Hathaway, Coinbase, etc. Took them all, equal weighted them, again, 6.6%. And then, what I did also was make make them rebalance every single month. Okay, that was important, is rebalance every single month. Any dividends that were paid out were reinvested back into this portfolio. And we're going to compare this against the Nasdaq 100 and the S&P 500. So let's take a look to see how it actually performed. As you guys can see here, and this is only starting from year to date. So December 31st, January 1st, whatever you want to call it. That was our start date. And we can see that, this synthetic weekly pay ETF outperformed both the QQQ and the S&P 500. Will it always outperform? I have no idea. Maybe they start adding a bunch of tickers in there that'll drag the performance down. I don't know. But the other question is, will WPAY be around in 10 years? Will it be around in 15 or 20 years? Who knows, right? And but we can see here at least that since the beginning of the year, this weekly pay ETF could have outperformed the QQQ and the Nasdaq. All right, by how much? All right, well, we can see, let's see, we got to scroll up. Yeah, so the weekly pay ETF could have returned 34.7% year to date, whereas the Nasdaq returned 10.8% and the S&P 500 returned 8.49%. All right, and again, you have to also take into consideration with this, 34.7% outperformance that this is unleveraged. If we were to stack in the leverage, it would be closer to about 41 to 42%, which is kind of crazy, right? And on top of that, it's paying out a distribution. Now, this isn't a perfect science because of the leverage. The leverage is the big piece in all this because it can have what's called volatility drag or negative compounding. So we have to take that into account as well for this weekly pay ETF. Because again, this is going to be 120% exposure to all of those other ETFs, right? To all of these ETFs. So we just have to keep that in mind. Take this with a grain of salt. For all we know, this could probably underperform the Nasdaq 100, the QQQ, or the S&P 500. But either way, I think that is still pretty cool. We'll see when this comes out how this will do. Again, you can use valueinvesting.io as well to run this test yourself. Again, I have QQQ in here and SPY, and you guys can play around with the numbers, right? Again, you want to make sure that you're rebalancing every single month, and you could start with a hypothetical, $10,000. I have the rebalance frequency set at monthly and dividends reinvested. So that'll do it for my video today, guys. I hope you enjoyed it. I'm excited for this WPAY. I really am. I don't know when I'll get into it. I'm going to wait for the margin maintenance ratio to come down a bit. I definitely do want to get into this ETF. I think it's probably going to be a replacement for one of my cores, maybe even XPAY or XETE, to be perfectly honest. I haven't quite decided what I want to do yet, but if this has pretty much the Mag 7 exposure, right? If this has the Mag 7, I mean, this is as good as an S&P 500 in my opinion, right? Of course, those dramatic drawdowns like we had all of August will kind of, be a factor in all of this, because if the weekly pay ETF was to drop, because of all of the, Mag 7 companies that make up this ETF go down, well, that might be a drag on performance, and then you start running into negative compounding or volatility decay, right? So that is not a good thing. So we'll see. But outside of that, guys, hope you enjoyed this video. Hope it was educational. Hope it was entertaining. I will see you guys in the next video. Have a great day.